Hi, everybody. Welcome to another episode of the Scaling Alpha podcast. Today, I'm joined by Ryan Ahrens, Chief Investment Officer at Green Ocean Global Advisors. Ryan has built a career spanning large Wall Street institutions, hedge funds, and private equity, and he brings a unique tech-forward approach to investment management today. We're going to discuss the realities of building nimble, data-informed portfolios and how he approaches research and risk in an era of rapid market transition. Ryan, over to you. Could you take us through your background and how you got to where you are today?
Absolutely. Hey, Ben, thanks for having me today. I had a pretty comprehensive large finance career starting at JP Morgan, a few firms that don't exist anymore like TD Ameritrade and E-Trade.
Yep.
Worked at a hedge fund and in the private equity space for a couple of years, kind of in between. And then my COVID job was Fidelity Investments, where I mostly worked with people on the West Coast who worked at tech companies that got paid a lot in company stocks. So, some unique planning challenges and a lot of client-facing work. When we started Green Ocean in 2022, myself and my business partner, John, I did move in over time into the CIO role, having managed portfolios at the hedge fund and done a fair bit of one-on-one in my corporate career.
Fantastic. So your partner, John, you mentioned he's over in Europe. Where is he based?
Yeah, he moved to Lisbon due to his wife's job at the time. They were opening up a headquarters right before COVID hit. He got on the last plane they let in from San Francisco to Portugal because the kids were over there visiting mom over the summer. So he sort of fell backwards into living in Lisbon, still does to this day. And what we've built actually is a firm that's focused on the cross-border expat niche. A lot of people that are exploring alternative global lifestyles, and that has been really our area of focus, grounded in top-notch, if I do say so myself, top-notch US-based, strong financial and investment acumen. That exporting your US dollars, I often say to people, if you can invest like an American and live like a European, you're getting a pretty nice deal out of life.
Yeah, that's actually not a bad deal. One that I'd be happy someday to take advantage of myself. I've heard Portugal's beautiful. So with that said, tell us a little about, about the company and what you offer, and we'll focus it later towards investment management, but I think it's good for us to kind of get that broad understanding of what you do and what your company tries to provide to your clients.
Absolutely. Yeah. Other than myself, everyone who works at Green Ocean has done an expat relocation of some kind. Most of them are Americans living in Portugal. And, that brings us into, a community of peers. We work with people that are interested in the cross-border lifestyle or have issues that span multiple countries, right? We call you an expat if you're an American living abroad because we are one of only a few countries that have permanent tax obligations. So there's a lot of different planning concepts that go into this process. We mostly are all certified CFPs, GFPs, which is Global Financial Planner designation, and we implement this in real world live fire scenarios, right? So we do planning only interactions with people that are interested, want to learn more. Hey, what's really the impact? How does this all work? And we do ongoing, advice with management fee, fiduciary wealth management. Try to be very reasonable on that. I'd say that's part of our millennial Gen X, overlap between John and I is, we're not charging people 2% for something that takes quite a bit of esoteric knowledge,
Yeah, that makes a lot of sense. And so in working with these expats and the people looking to kind of change up their lifestyle, imagine that introduces a lot of unique ways of looking at how you're going to manage their money, plan their wealth, protect that wealth, or, save them taxes, all those sorts of things that you have to do. But let's kind of focus it in on kind of investment management. What type of investment management services do you provide? Is it custom? Do you have specific strategies that are kind of like a menu that you offer? Or is the investment management customized in the way you manage their portfolio unique to each individual client?
Great question. I'm glad you asked. I mean, this is for a moment why our philosophies around investment management are informed by John and I's experience working at large Wall Street companies. If there's an opportunity for us to put in more effort, because John and I are both tryhards, we like to get trophies and stuff. What differentiates that a lot of the time is discipline and hard work. So, there are areas where I think, and I think there are people who would agree, some investment management has gotten kind of lazy. Hey, index fund this, ETF that. Hopefully, ARK investments can get all the growth that we need. And what
Mhm.
what can happen when you just depend on one, right? So we do custom bespoke portfolio management. Part of the issue when you go overseas, especially to other countries, America's got pretty low taxes. Other countries have pretty high taxes. So tax alpha is actually an area where we can get our fee back in most cases by buying individual securities. This requires us to select individual securities. We do have various portfolios that cover growth, blue chip, alternatives, you name it, international exposure using ADRs, which also can operate as a currency hedge against the destination currency. These are all just areas of greater focus where we've now got a track record that goes back about 5 years that shows the extra effort is well worth it. Right.
Fantastic. Well, I think, there is a danger to index funds. Obviously, you can invest in different funds, but you're generally getting a very broad exposure to the market. A lot of times you're focused on a certain tracking area to indexes. And while you can obviously generate alpha, there are much more alpha opportunities if you're looking at the underlying securities, right? And as well as the ability to employ tax harvesting strategies, right? Tell me a little bit about, though, coming from the background of hedge funds, from institutional asset management, what are the most important things about that experience that you've brought to the wealth management portion of your business?
I mean, I think one of the biggest would be the individualized attention. When you're working out a hedge fund and a person's coming in with pretty significant wealth, they get a full kind of mock up of how this is going to work for them. At least the hedge fund I worked at, which was
Yep.
focused on complex options positions against market indexes. And
Yep.
seeing how that fits in on a holistic basis is far more of a financial planner fiduciary approach. We're not just trying to be, here, give us 10% of your portfolio and we'll make this little pocket operate at the highest level possible. We really want to know what the whole context is doing. Sure, I can be a mercenary within a person's overall picture. Absolutely have done that to great effect. Got a guy who trades a lot of crypto, lives in Brazil. We do his bonds and just his bonds. Absolutely great.
Yep.
At least I know what the big picture is looking like.
Yep.
How that comes in, especially when you look at things at an institutional level, I think it just further reinforces the idea that each person deserves that specific individualized attention. We back test, we forward test, we want to look at volatility events. I want to walk you through, here's what this would have done in 2025 when tariffs got announced and the market dropped 20%. Here's what your experience would have been like. Are you selling? Because the
Yep.
most dangerous thing a person can do to their own finances is get so freaked out that they sell into losses. And when do you
Yeah.
get back in, right?
Yep.
I'm sure we'll have opportunity to talk more about this, but executing with some confidence and conviction is, I think, one of the most important things we bring to the table. When you are working at a hedge fund, when you are working at a large institutional money manager, I think that's a lot easier because it's this, you know, $200 million with no one's name on it that just follows exactly what universe I am going to execute within. So you have to have
Mhm.
both brains. On the one
Yep.
side, what is the best thing to take advantage of an edge? And on the other, what is this person that I'm doing this for? What are they going to experience?
That's interesting. You have these two sides here, right? How do you juggle when there's kind of extreme market events, managing around what is how you would manage an institutional portfolio to capture opportunity or to hedge your risk in these extreme market events when that doesn't align with the fear or the worry that one of your clients may be experiencing in that moment?
Mm, great question. Compartmentalization, professional compartmentalization. Have a
Hmm.
therapist, but also, right, each sleeve. So we often run these with sleeves in mind. I have my AI growth stock sleeve. And in that portfolio, the objective is take advantage of this, right? Over here, we've got our blue chip stock rising dividend portfolio. Very different
Yep.
objective. We want to align with the large cap Morningstar. We pick benchmarks. We have process that we apply, and we want to be mostly aligned with the sector allocation and execute on the expectation, right? I think a big part of it here is we can get caught up as portfolio managers aligning with a client's expectation. What's their expectation? What does the news say? S&P 500. Here's what the Dow did. Here's what the Nasdaq did. That's
Yep.
not necessarily the benchmark you should use in a 60/40, right? Because that's 40% bonds. So, I really believe in siloing these things AI here,
Mm-hmm.
blue chip here, bond there, alts over here,
Yep.
maybe some international,
Yep.
and managing each of those towards their definition of success. Each one has its own definition of success, and defining that, can be a useful exercise to do with your favorite AI chatbot. Have a human you can bounce some ideas off of too. But
Mm.
I think that really does help. Is like, hey, in a good year in bonds, we're doing 4 or 5%. Win,
Yep.
all right.
Yep.
Meanwhile, market drops 20% due to a tariff announcement. Buying opportunity because
That
this over, right? So
this makes a lot of sense. So what you're doing is you're breaking into sleeves. You're telling your clients this is the benchmark that this sleeve we have to measure ourselves by. And so when the market is roaring and they're seeing 30% returns and for this, that, or the other thing, and they come to you and why aren't we participating? Why aren't we growing like that? Well, let's look at each sleeve. Let's look at the benchmark. This is why we put these sleeves together to hedge your risk and to meet your expectations this way, that, or the other. And so you just kind of ground, it helps you much easier ground them in the decisions that underpinned why you allocated those sleeves in the first place.
it is well said. Good friend of mine, well, actually, my mom was an amazing chef, right? And she would make an
Mm-hmm.
amazing dish. And,
Mm-hmm.
sometimes you think, and I certainly fall victim to this, hey, I like truffle, more truffle oil, please. And what does that do? That
Yeah.
can overpower the dish, right? These
Yeah.
days, there's a lot of FOMO. We're all so
Yeah.
connected on social media. And this is, you talk to someone at the water cooler. Ladies and gentlemen, I mean, I worked at TD Ameritrade and E-Trade Financial, a lot of self-directed investors. I get to see the portfolio of that guy at work talking about his NVIDIA trade. He bought 10 shares. He didn't buy 100, right? And he's got a bunch of losers in there too. So he's only
Yeah.
talking about the win.
That's true.
We are kimono open. There is nothing behind the curtain. Here's your statements. Here's your audited performance data. Here's our cost. Let's talk about this every single quarter. Holds you to a different standard. And we need to come into this with our own definition of success, risk-adjusted return. That is my favorite usage. We can use standard deviation, which is the volatility present in a portfolio for a layman listening, right? And we'll compare that to benchmarks. If we can deliver above and beyond risk-adjusted return that we're seeing on a broad basis, then that's a win. In some cases, higher lows are all we need to do, right? And in some cases, the highest highs possible.
It makes a lot of sense. So talk about how you kind of put together a portfolio for your clients and how, obviously everyone has their own risk adjusted reward goals, timelines, what have you, right? And there's a lot of customization there. Let's talk about actually when you're going to underwrite a stock. When you're researching, tell us about your approach to finding opportunity in like a new idea, a new company that you may want to invest in, and then how you go about diligencing that company to include it into one of your sleeves, for example.
Yeah, I mean, it's a great question. I think it depends on the portfolio and the objective, of course. But,
Mm-hmm.
you start with a stock universe that now these days contains about 5,500 companies, publicly traded companies in the entire world. So every dollar in the market, quote unquote market, trillions and $30 trillion or so is chasing 5,500 names. Of those, there's 400 or 500 that are big. And, it does kind of narrow the universe quite a bit. There are some market, when we look at like the S&P 500, you can look at the amount in each sector. And generally, I think that's a good framework to start any investment research effort, right? Is to
Got it.
keep in line with broad spectrum of market sector allocation, market weighted approach. From there, when you are looking to be thematic, you want some representation from these different areas. You can't be all semis and miss out on tech services or communications,
Yep.
right? Other
Yep.
companies will innovate too. But especially these days, I think you can really see it with things like CapEx investment. I mean, each different environment is going to call for
Mm-hmm.
a different analysis process. But, at the highest level, I use a lot of screeners. I use various tools from Morningstar. Zacks Advisor Research can be helpful, right? I
Mm-hmm.
think the main thing, and one of the things AI can help with, is trusting one resource like just the Wall Street Journal. Well, you're only ever going to do as good as they can do, right?
Yep.
Add to that JP Morgan, add to that maybe Zacks, which I've liked, by the way. A shout out to Zacks. They render opinions. Now it's a question, are you yeah.
By the way, I'm friends with Raina Zacks.
Nice. Oh yeah, right on.
Yeah.
Yeah, I think they do
Yeah.
good work. And hey, they render opinions, right?
Yep. Yep.
I have gone counter to some of those opinions and won. So it's not, again, no one person's right about everything, this guy included,
Mm.
right?
Yep.
But
Yep.
yeah, part of it also is going to be position sizing. Not always the thing I trot out in a client appointment, but for a few years I had a friend that we would go to a casino in near Seattle called Snoqualmie Casino. Shout out, that was a lot of fun.
Mm.
And I had a
Mm.
system that I developed. I mean, I went in with small dollars, $100 in my front pocket, $100 in my back pocket, and I'd play craps. And if I am
Yep.
losing fast, I only do the first 100, maybe grab myself a non-alcoholic beverage and head home for the night. Still had a good night. Sometimes, you lose that $100 real slow. You're having fun. The second 100 comes out, and I keep a spreadsheet. Of course, I do. My lifetime, I'm up
Yep.
in craps like several $1,000s. It's
That's awesome.
that really taught me
But it's
bet
a measured
sizing.
strategy.
It taught me
Yeah.
bet sizing. It
Yep.
taught me how to understand kind of a hot hand. Yeah, that's not the only thing that you should do, but a lot of this stuff, there's so many really smart people doing investment analysis that can't execute. You have to put money behind your conviction at some point in time, find a way to be convicted. And eventually you'll have a few years of experience behind you, can lean on that, sure. But past performance is not indicative of future returns, as
That's
we so well know.
We definitely. Well, you're giving us this the craps example, right? It seems like you have an adaptable strategy, right? And I understand that adaptability is an important part. Important to how you actually manage money. So, like in a scenario where where you're seeing like a market signal, right? How do you detect like if the signal is a genuine is something that is genuinely requires you to shift strategy versus a signal that may be just noise and better ignored?
Man, now we're getting into the meat of it, I think.
Yeah.
A
Yep.
signal that is headline driven and has no fundamental basis is so easily dismissed by most serious financial folk, right? Or
Okay. Why
intelligent.
do you say that?
I think it's so easy. I get it a lot of like, well, the fundamentals, look at the PE, Ryan. The PE is terrible. Tesla's PE is 300, and yet they hit $500 a share, right? So to depend on the Warren Buffett or the Benjamin Graham intelligent investor approach where value-based investing is going to outperform, I think there used to be this wholesaler that came into the office in the TD Seattle branch all the time, and they always said the same thing. We have rocket scientists on our panel of investment analysts, and they say value will outperform growth. So for 20 years, they've been wrong, but they'll be right eventually. And now we're 30 years in, and they're not right still, because growth is actually where the innovation's happening. They're operating with high PE ratios. They keep increasing their profit margins. They keep breaking into new realms. And now we have multiple trillion-dollar companies, multiple. First company to reach $1 trillion was Apple Computers in only 2019, and now it's 4. So
Yeah.
like how many, right?
Yeah.
If you were a fundamental investor, you'd have avoided Apple since like 2013. So
I was watching a podcast, this was somewhat separately, where they're saying that like if you get to like 100 billion, your chances of getting to 1 trillion are extremely high, right? And if you look at the numbers, the ones that got to trillion, getting to another trillion as 2 trillion is almost guaranteed, right? And obviously there's a very small sample size, right? But we're seeing this compounding effect, and I think it's because you see these entrepreneurs recognizing in a lot of ways that they have these amazing assets, that there are other ways to monetize the assets they've already built. They just haven't focused on yet. And they're finding these new ways to monetize what they've done. At least that's my interpretation of it.
And there's no hate over here, right?
Yeah.
But
Yep.
I would even hesitate to call them entrepreneurs at that point. They're captains of industry. They, in some cases, control the entire. Sometimes they control entire departments of the government, right? So they're not really entrepreneurs anymore. They have many cards. Out of a deck of 52, they've got 40 cards. That is an intangible that is not going to show up in a PE ratio. It's not going to show up in a Sharpe ratio, right?
Yep.
There's another thing that we can do sometimes as just numbers and analyst type folk is we'll look at the volatility metrics and go, ooh, this stock is volatile. I'll just say this for the people in the back, Sortino ratio. It does not punish downside or upside volatility. It punishes only downside volatility.
Yep.
Upside volatility can get you invested in things that can be quite powerful as a growth engine of a portfolio. Yeah. So, I mean, I just, I'm not saying that my approach is so special and novel. It's just that it has garnered some solid alpha, and there's some good little pockets of that. Crypto last year, for example, the coins, not great. The companies were being deregulated left and right. That's kind of headline driven. But if you hopped on that opportunity by October, you were doing super well, right? So we can
Yep.
we should talk exit strategy too, right? Because
Yeah.
profit orientation is I think an important part when you're doing a holistic approach.
And let's get there in a sec. You mentioned you mentioned volatility, upside volatility, right? And I'm very much aligned with you. Upside volatility can be great, but you still got to pick the right companies, right? And so, we're seeing these companies that, like the example of, value for years and years and years, underperforming growth, but there's still a lot of growth companies, right? And we have these companies that are to some extent defying the historical rules of that we've all learned. So tell me about, now that you've got this opportunity set that you're looking for that has this upside volatility, what are you looking for in a company that is going to give you the conviction to invest?
I mean, again, this is a different answer than it was in 2022 or 2023, but
Because you have to be adaptable,
it
right?
keeps changing, it keeps
Yeah.
evolving, and now we're starting to look at
Yep.
the downstream effects. Who is going to benefit? I mean, I think so often we can sometimes
Hmm.
remove ourselves from the question, which is so simple. Who
Hmm.
stands to profit? That's capitalism. Start figuring out
Yep.
the chess game, right?
Yep.
If this person can profit, then this could happen. You can find edges. This is part of like my formation in my 20s, working with a bunch of pretty smart engineers and software folk in West Coast tech companies that manage their own portfolio. I learned a lot from clients. There would be times when I'm looking at a trade and it's like, well, no one else seems to be doing this. It must not be a good idea. Turns out I had spotted something that other people didn't see. I'm not saying that this is going to work on $1 billion portfolio because you're an institution, but ultimately, when we look at how opportunities present themselves today, it's so different from I think any other time in history, almost maybe save the 90s. But you really have to look at their engagement with this theme. What's their capex investment? Are they borrowing a lot of money? What are they putting into physical infrastructure to support their technology growth? Now we're starting to look at secondary and tertiary impact,
Hmm.
cooling, electricity delivery, right? But
Yep.
these are kind of short-lived jobs. If what AI stands to do is potentially reposition a component of the white collar workforce, this is new,
Yep.
right? We haven't,
Hmm.
when they made the steam hammer, there's an American folk song about that. John Henry versus the steam hammer. We're doing that with
Hmm.
the office now. It's a matter of
Yep.
time, right?
Yep.
So it's
Sure.
actually it's great. I mean, thus far the economy hasn't melted down due to major technological innovation. What it does is it empowers the worker to be ever more valuable.
It's true.
Which companies stand to capture that the best? The big ones, the biggest
Yeah.
ones. The small ones can multiply their force. One person can do the work of three with if you're good at tech and can use an AI chatbot well, and on and on and on. But as far as how do you invest in that? Well, it's really hard to invest in small companies by definition, by design.
Yep.
What are the big companies that are going to provide the services to everyone downstream? I mean,
Yep.
why not start there these days? I don't think you even need to go that much further right now, because then you're in that space. That's the primary provider who secondarily provides services to Google and Apple and Facebook and Nvidia and Broadcom, and keep going and down the list.
Hmm. Yeah. If you were how should I say, a pessimist, or you're looking at it through a certain lens, you could say, well, the rich are getting richer, right? But in a lot of ways, that's going to benefit anybody who invests in them, right? And the key is, though, how do you detect when the rich are no longer going to get richer? How do you, right? Like for these big firms, whatever you're invested in, when do you know it's time to get out?
Mm.
How do you detect when your thesis is suboptimal, at least at minimum, compared to other opportunities that you may be able to allocate towards?
I like this question too. Great questions, Ben.
Thank
one
you.
of the things I will add really quick or state, right? And I point this out
Hmm.
sometimes to people that I work with that are super, super duper smart, right? I mean, it's one of the great advantages of working in finance. You get to get right at the kitchen table with some really smart, successful people. Stephen Hawking existed. Albert Einstein existed. And neither of them became billionaires. They were wicked smart.
Yeah.
So maybe intelligence is not the only selection factor for success in the capitalist system as it stands today, right?
Yep.
As a start. Now,
Hmm.
I don't want to go too wandering from your core question, but I grew up in California. And when I was in high school, Enron happened. And I remembered specifically thinking when I was like 16 years old, wow, that power company is doing really well. Now we have rolling blackouts. That doesn't make a lot of sense to me. But you know what? I'm 16. The adults, someone's watching them. And you come to find out 4 people got stuck with the bag and the other 10 people ran off with billions and billions and billions of dollars, much of it taxpayer dollars.
Yeah.
None of them went to prison. That's success in this system.
Wow.
So let's remove ourselves from what we might feel personally about that. I'm not going to get into politics. It's pointless. That's pointless because honestly, no matter what color you vote for in the black and white system that we've got, they're both pretty aligned with the interest of capital. So,
Yep.
we can usually trust that, regulators are going to install people who have been in the business and maybe have friends. And you can watch some of those trends. One of the big things that I like to watch for is the Fed. The Fed actually contains, other than, its current chair has a lot of wealth, but look who's on the board. Those are some
Yeah.
extremely knowledgeable and experienced economists with access to all the best data. Don't redo
Yep.
their work. Stand on the
Yep.
shoulders of giants. Look at what they have to say. Look at the
Yep.
commentary that they provide. Watch the interest rate discussions that they have. The market prices and interest rate drops. The big reason why we're experiencing some softness in the market right now is the kind of dovish, or pardon me, hawkish outlook, right? Markets priced in more interest rate cuts, and yet the most recent Fed meeting, it's like, oh, we might have to, inflation's up, right? We started a shooting war in an oil producing country, and there's the petrodollar. Look at all these interconnected spider webs. You don't need to replicate the basic work. Look, I know how smart you are, listener. Don't
Hmm.
replicate the basic analysis that you can just get from the Fred site, right?
Yep.
Start
Yep.
there and then form your own opinions and perspectives to maybe help you decide, oh, if they're going to raise interest rates, why don't you just go look at a chart of when they start doing that and how soon after recessions become possible? Maybe you should
Yep.
be more profit oriented with your MU stock that's up 900%. I wasn't supposed to
Yeah.
name, sorry.
Yeah. Yeah. No, no worries. No worries. It's an example. It's just an example. It's not a representation of a real position.
When you are skyrocketing on this, I think that goes back to the craps thing a little bit. I mean, I'm going to leave some chips on the number 9, my favorite number, right? But when it coughs up the amount I have betted, I'm going to take that and put it in my pocket. And,
Yep.
maybe I'll throw a nickel down on it or something, but take profit. Take profit when profit exists. Otherwise, it's just
Yep.
paper gains, and you're like everyone else. You bought an index fund, you sat on it for 30 years. It can do fine. It can do fine. But when you're managing for risk,
Hmm.
these days, I think the barbell really, really exists. And now we can, move on to another question, but we should talk about the
Yeah.
barbell approach.
Yeah. No, definitely. And taking your wins when you have them, that's extremely important. But part of that is that you have to go out and detect and read a lot of information to determine when is the time to pocket some wins, right? And so you mentioned going to the Fred site. I imagine that you are placing yourself in this roaring current of information, right? And content and data that you have to stay on top of, right? And one of the great new tools we have in the market is AI to help you stay on top of them. So let's talk a little bit about that, how AI is changing your way you approach managing money and kind of what you think the investments are. What do you think the effects on the industry are? So give me a little kind of view on how AI has changed how you research, invest in the investments and how you manage your clients' money.
By definition, AI these days is a large language model, right? And if you talk to someone who's in the space, I mean, I am in the San Francisco Bay Area, right?
Yep.
There's work being done on general AI, but the experts think we're kind of far away still. We'll see. Lots
Yep.
of money going into it. We'll see.
Yep. You will see.
But large language models, by definition, give you, I said this earlier, but it kind of gives you the temperature of the just all consciousness of people, right? that you're going to get a bunch of perspectives and aggregated opinion from forums and different research and analysis that AI has chewed through. Right now, there's copyright stuff that has been ignored. And look at the leap forward in tech that we've got. This gives us an index. I think this came at such an interesting time where the internet actually has so much in it. Right, it's been adding to for decades now, and now we've got something that can help us navigate that. Right, I still, we're starting with a restricted universe. We're not looking at the entire world. We're saying, just for starters, we're already narrowing it a lot by saying investment research. That's LLMs can do so much. They can help you fix your car, right? But we're narrowing already, just, being able to narrow down. And actually, one of the things that I've been utilizing lately is using AI at the broadest level, maybe to start my ideation process, to bounce some ideas back and forth. And once it starts to hallucinate, because I have still my own knowledge and awareness of how investment management works and how to do investment research, once I find a hallucination, an incorrect definition, a problem, that is when I abandon the AI and go do my own research to fill that gap. You got to know enough to know when it breaks down. It does eventually at any level, right? It might only have data on headlines from a month ago, and it missed the entire outbreak of a war, and now it doesn't know. Well, you have to depart that and still fish on your own. So, I think that right now at the highest level down to the narrowest, that's kind of what the process looks like. There are many interstitial steps that I use AI in there. Create a spreadsheet, help me lock in these disciplines or perspectives as we do analysis. Help me understand the weighting I should have between these different volatility metrics, and as you study for different designations like the SEMA or the AAMS or anything available through lovely institutions like IWI or the College for Financial Planning, there's a lot of information on, like, here's how you calculate this ratio. Well, here's the beautiful thing, right? AI is the calculator. Go ahead and use it for that. You don't need to know how to calculate the Sortino, but you are going to be the most valuable by identifying, hey, these are the things I want you to calculate this metric that I am looking to confirm or refute. Calculate them, right? That's what AI is going to be really good at. I'm going to go find the things to feed it.
Yep.
If that makes sense.
That does make sense. So it sounds like you're using AI to be more productive, but you understand the risks inherent in AI, that it's not perfect. It makes mistakes. It hallucinates. It loses context, right? The way I look at AI is, for the investment research use case, is that if done well, and this may not be applied to you necessarily, it can, but yeah, actually could. It can increase the breadth of your research and giving you access to more opportunities that are companies that you may want to look at, but also could increase the breadth, meaning when looking at an individual company, you can actually monitor more resources, more content sources. So you can assimilate more information. That's one way it can be used. The other way it can be used is to help you look deeper into a company, to find hidden risk or opportunity that you may not have seen because you just didn't have the time to uncover it. How do you feel it's benefiting you? Is it benefiting the breadth? Are you using it to review more content? Are you using it to go deeper? Or are you using it for both?
Definitely using it for both. AI can also be a really useful tool to help you hone in on perhaps research perspectives too. Hey, help me shop for a good professional investment research and advice resource. That's how I actually got some of the tools that I use today, where then I can also use the reports that they generate. Again, stand on the shoulders of others here, right? If Zach's investment research has a panel of investment analysts grading and assessing and spitting out some metrics, find a way to inculcate that into your process, save yourself those steps. Like, hey, look, I love other smart people, big fan. Okay. But we're all limited. There's only so much brain power one person can give to a situation. You can use AI very well to aggregate some of those concepts, trust but verify. Look at AI like, perhaps, you can look at it like a person on your research team. If you're the one running the AI, you're the boss. You got to go in and check. Make sure that it's right. Verify and cross-check from time to time. Don't just eat that up. But in the end, especially some of the hard data numbers, it's very helpful. I mean, I'm looking forward to seeing AI advance more in this way. Taking a moment here, Warren Buffett's entire approach, and a friend of mine actually met him as part of his. He went to Omaha and got to meet him and like spend a day with him. And he just has these huge binders, at least this was in the mid 2000s, these huge binders of corporate financial information. And that is how he selects the portfolio companies he sticks into Berkshire Hathaway. And one could argue he's doing pretty well with that. So he's
Yep.
identifying something and going that deep into the numbers. That is something that we don't necessarily need to put our eyes onto anymore, right? We can have a computer read that thing
Yep.
and spit out, like, give me the bottom line, right?
Mm-hmm.
Verify that it's doing that correctly. I have tasked AI with these kinds of tasks, found that the answer was odd, gone in and found mistakes. I've also gone in and found aha moments. Absolutely.
Mm-hmm. Yep.
It's even happened several times in the last year. You know, that this is just it supercharges the ability to just parse a lot of data. If you use it appropriately like that, you want a horse to be a horse. You don't need to try and make it a car. Just let
Yep.
it be a horse.
So AI gives you, X% increase in productivity. What portion of that X increase in productivity is taken up with having to verify?
Mm.
So X becomes less than X in true productivity gains. Estimate it in your mind.
1 to 200%, sure. Already a pretty productive person, I would say in general, but it's allowed me to not. Okay, an example, and this is now going to be a little bit more client facing, but one of the things that I find aberrant and just a waste of my time is formatting when I'm like doing a PowerPoint. I just spend so much time making sure the colors and the text formatting. Ugh.
Yeah.
I
Yep.
can have AI take that off my plate functionally. I can
Yep.
feed it a bunch of
Yep.
the just copy pastes from my notes and say, hey, make this look pretty. And then I
Yep.
can I can iterate that further. That's a massive time
Yep.
savings. Have AI
Yep. That
support
is.
you in the thing that you're not good at. I'm very good at chewing through data and seeing things that a computer doesn't see. So why would I try
Yep.
and hand all of that off to the computer? Not all of it.
Yep.
I
Yeah.
got to get in there and look at the numbers. That's my angle, right? Not every person who's listening to this is going to have that. They then use AI to support you in that way and enjoy your formatting. Like that's just use its support where you are in need of support. Sun Tzu, Art of War, really quick, easy
Yeah.
read. Read it. It's a great example of, I think, how I like to approach AI.
I think that makes a lot of sense. It doesn't mean you can't eke out benefits on where you're already good at, but start with the things that are the weaknesses, things that you hate, the things that suck your time and suck your soul, right? Sorry to be dramatic there, but formatting PowerPoints is one of those things for me as well.
Oh
That
my
I
goodness. Yeah, and
yes.
we're like, I'll admit I sometimes get a big, I am freaked out in my 60s and this thing happened and I'm super emotionally engaged with it. And it can be nice to have, when I'm really busy, hey, why don't you chew through this and give me the salient points? Oh, okay, this is the thing I can support with data. Great. Suggest an article. Great. I didn't have to go do that. You just saved me 15 minutes. Think about it this way, right? Like, imagine you have arthritis in your clicker finger. As you seek to get better at the tech and everything that we have to do, imagine you're getting arthritis in this finger, because you will if you keep it up, right? But like, save yourself some clicks. Absolutely. I'm not necessarily seeking for AI to take 4 hours from the 4 hours I spend researching in my day and just do all of that. What I'm looking for AI to do is take the thing that I do 400 times a day that takes me 30 seconds and make it 1 second. That's a pretty
Yep.
nice improvement
Yep.
in what I can then focus on. And I actually still enjoy personally a lot of job satisfaction. I love what I do because now, especially, I don't have to take all of my own notes when I meet with clients. I have an AI digital note taker. That has given me back entire swaths of my week. And I double check the notes, right? Now,
Hmm.
you earlier said, I'm just, now kind of business management. When you earlier said, what's your process? What's your percentage efficiency improvement? Well, if I'm getting 200% efficiency improvement in my note taking, why would I not take 10% of that back to verify that those notes are accurate? I mean, there's always going to be some transcription errors and stuff. Don't
Mm-hmm.
don't get lazy, humans,
Yep.
right? Like, we
Yeah.
we got to
True.
we got to fight robots that don't have the concept of lazy. We got to not be lazy.
Yeah. It's true. It's true. It's true. Well, I think you have the right approach, and I do think over time you're going to be able to automate more of the quote investment research part of the business, right? But it's got to be done very carefully because that's the portion of the business where if you make a mistake, there can be drastic consequences. So, from our conversation before, prior to this call, that was something that you were very aware of. That you make a mistake with someone's life savings, that is an unacceptable mistake, and you can't just trust AI and AI to be mistake free.
Accountability, not just a nation in Africa or something, right? I mean, that's not a very good joke, but like, it seems like this foreign word these days. And I mean, let's be honest, the fish stinks from the head. There's some really weird accountability, lack of it happening at many levels. Well, if you're listening to this, you're not rich enough to be that unaccountable. There's like 50 guys in the world that can do whatever the heck they want. That's not us. And in the
Yep.
end, you better not. God, I will take that client from you if you'd say, "Oh, well, we made a mistake, but it was the computer. I'm so sorry." Be a human, own it, take accountability for the actions you take on behalf of another person. We're fiduciaries first and foremost. I sleep like a baby at night because I know without doubt I have done the due diligence to and I cared and I considered the person who I was investing for, or maybe the group of people as I rebalance the AI portfolio, right? Have your convictions, have your reasons for doing anything. And if you are in a position where you're not critically thinking, this is the skill that we're going to have to all master is critical thinking. If we can offload some of our analysis and data understanding
Mm-hmm.
and data parsing, great. Then you as a human with cerebral cortex have to master critical thinking. And that's
Yep.
what you're going to be able to really completely master AI with and utilize it to its maximum ability because you can apply it in unique ways or in specific circumstances where it gives you the leverage to
Mm-hmm.
really up your game by critically
Mm-hmm.
thinking.
It's true. And as you know, that our firm is really, really expert at AI, but I've talking to a lot of great managers, investment managers. And one of the things a common thing I'm hearing is that the best ones tend to use AI as almost like a colleague that they can bounce ideas off of, but can actually critically think, can challenge the manager's own assumptions, right? So critical thinking, we all have our blind spots in critical thinking, right? In our assumptions, we all can draw faulty conclusions. Just to say it another way, you can use AI to help you hone your own thinking. And is that something that you do as well?
Absolutely, absolutely. Again, San Francisco native. So let me
Yep.
let me
Hmm.
suggest a scenario for you. This is something I stay acutely aware of as a investment
Hmm.
professional who
Hmm.
uses a lot of AI.
Yep.
The steroids era of baseball affected the San Francisco Giants, my favorite baseball team, quite a bit, right? What happens when
Hmm.
you take steroids? Your body stops producing those hormones, testosterone and HGH because you're getting it from an external source. And you can have big, strong
Hmm.
muscles, but the moment you stop, there's a lot of health problems. That's
Yep.
actually, I think, a great bit of allegory for the human experience, right? I really believe in, hey, take a break from time to time. Stop injecting the steroids for a week. Try applying your own investment research process because you can. And I have identified weaknesses that I was offloading onto AI, and my muscles were getting weaker because I was allowing that to replace my own thought process. This has been, I will say from our perspective, this is part of why we're proud that we adapted to these tools very quickly and early because we could also identify some of the problems that they would bring up. I will absolutely say, hey, we're going to do this. Help me run a SWOT analysis. This was my take. And now you run a
Yeah.
SWOT analysis on this thing that I'm
and
going to
and
do.
and feel free to disagree with me to
Poke holes.
be proof. Yeah, exactly. It's important,
And
and I don't think
sometimes
a lot of people not there are a lot of people don't realize that AI is built to be sycophantic, and so
very.
you have to protect yourself against that very diligently.
Absolutely, absolutely. And I I uh, I absolutely have had that exact experience where it's like, hey, stop agreeing with me so much. Find the hole. And then it's like, oh, here's this thing that was actually pretty obvious and glaring that I was completely glossing over because I didn't want to hurt your feelings, right? So, don't hesitate to maybe have a space or a thread in your AI or pick a bot that, really can get past that. Like give it
Yep.
instructions. Hey, be brutally honest with me. Act like you're my angry spouse, whatever.
Yeah, exactly. So let's circle this back, right? Critical thinking. poking holes in your own premises, trying your best to find truth, to make correct decisions. Let's circle this back to that way of thinking and how it applies to your target market to kind of round out this podcast. Those people who are looking to move, to a new place, have to deal with the, tax consequences of multi jurisdictions. Let's speak to them. Tell us why you're the best fit for them and how critical thinking applies to that, and then how they find you if they want to learn more about your services.
I appreciate that, Ben. What I'm finding often is the research and tools and information that's available is truly a fire hose. As soon as you start to express this interest in, you name it. I actually still work with a solid book of US based clients that will stay US based, but most of the people we work with are seeking a global citizenship or a global lifestyle, whether it's full time or part time overseas. And there are pretty significant things that'll happen that, like a sycophantic AI model or someone on Reddit or Facebook, can really lead you astray, because that's going to be their experience. This is what they felt with, very different circumstances and opinions, and everything colors that. Right? There are people that say everything's political. Everyone's own beliefs are going to be built into the thing that they say. Here's what worked for me.
Mm-hmm.
I think it's harder than ever these days, between LLMs saying, "Great job, sir. That's what you should do," and someone online saying, "This is what worked for me and mine," where there's a huge disconnect on what would really work for you. That person that bought this stock this many years ago in this index fund and worked at this place, and your kid wants that, and your wife wants this, or your husband wants that. That's where we really come in, because I have yet to come across someone who gets everything fully figured out on their own. Even if you're extremely independent and self-directed, we can always find a way to optimize this in a better alignment for you. And then in this age of AI, we cannot undersell the value of this feeling good. That is the most human thing. I live the way I want, my house looks the way I want, my car, my whatever, but it feels right. When people do this and optimize perfectly according to a spreadsheet or an AI model, and they just optimize it based on what that thing said was best, you can feel unfulfilled. And that is, I'd say, where we really come into our greatest benefit and value for people, is helping you achieve fulfillment while attaining those goals, helping you be realistic about what is and isn't applicable to your situation. I've had people that ended up way down a rabbit hole on a tax consideration that they're never even going to trigger, right? AI wasn't knowledgeable of their situation enough to say, "Hey, that actually doesn't apply to you because you work for the government and that's not taxable," and blah, 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 right? These little rules and laws that AI one day very well could do, but we're
not yet.
Yeah.
They need Ryan from Green Ocean Global Advisors
and the fantastic team over at Green Ocean Global Advisors of people who have done this firsthand and found that this piece was missing or this piece was difficult. No one mentioned this cultural disconnect or what that bureaucracy process feels like. We want to make that process feel fantastic, give you confidence to move forward into what is jumping off of a cliff into the water below. It's a pretty big leap, and we grab your hand and do it with you.
Hopefully an amazing leap. Well, Ryan, thank you so much for joining us today. It was very insightful. I hope everyone listening has learned a lot. And if you are thinking about becoming a global citizen, reach out to Ryan at greenoceanglobal.net. Thank you for being with us today, Ryan.
Thank you, Ben.
Really appreciate it.
Thanks for having me.
Thank you. Thanks everyone for joining the Scaling Alpha podcast. We'll see you on the next episode. Thank you.